Have you ever wondered why the wealthy seem to grow their fortunes exponentially while many others struggle just to stay afloat? It might seem like they have a secret trick up their sleeves, but the truth is, they leverage something that's accessible to nearly everyone: debt. Yes, debt. Something most people are taught to avoid at all costs. But the rich view it differently. They don't see debt as a burden, they see it as a tool. And today, the curtain will be pulled back on how they use this powerful tool to build massive wealth. By the end of this video, the strategies and mindset behind leveraging debt for wealth creation will become clear. So, stay tuned to learn how this game-changing approach could transform your financial future. Before diving in, let's set the stage with a story. Imagine two individuals, Alex and Sam. Both start with a small amount of capital, but they have vastly different approaches to managing their finances. Alex is cautious, saving every penny and avoiding debt like the plague. Sam, on the other hand, embraces a strategic use of debt. Fast forward 10 years, Alex has a decent savings account, but Sam has built an empire. How did Sam do it? By understanding and using debt in ways that actually made money. This isn't just about buying things you can't afford. It's about using other people's money to create more value. Here's how it's done. 1. Good debt versus bad debt. The first key concept to understand is the difference between good debt and bad debt. Most people are familiar with the dangers of bad debt: credit card bills piling up, high-interest loans that lead to financial stress. This is the kind of debt that keeps people awake at night. It's the kind of debt used to purchase liabilities, things that lose value or don't generate income. However, the wealthy focus on accumulating good debt. Good debt is an investment in assets that generate income or appreciate in value. Think of real estate, businesses, or stocks. When used wisely, this kind of debt can actually work in favor of building wealth. It allows leveraging other people's money to purchase an asset that grows in value or produces income over time. The wealthy use this concept to their advantage, consistently seeking opportunities where borrowing money can lead to a greater return than the cost of the debt itself. 2. Leveraging real estate. One of the most common ways the rich use debt to build wealth is through real estate. Purchasing property using a mortgage is a classic example. Instead of paying hundreds of thousands in cash for a property, the wealthy often put down a small percentage as a down payment and finance the rest. This allows control over a large asset with a relatively small initial investment. Take, for instance, the concept of rental properties. By taking on a mortgage to buy a rental property, the wealthy can collect rent that not only covers the mortgage payments but also provides additional income. Over time, as the property value appreciates and the mortgage is paid down by the tenant's rent payments, equity builds up in the property. This means that the initial investment grows significantly, all while generating a steady stream of income. 3. Business and investment opportunities. Another way the wealthy use debt is to fund business ventures. Starting or expanding a business often requires significant capital. Instead of using personal savings, many successful entrepreneurs use loans or lines of credit to fund their ventures. This allows them to preserve their own cash while leveraging the bank's money to grow their businesses. This strategy isn't just limited to starting new businesses. The wealthy also use debt to invest in existing businesses, buy stocks, or even take advantage of market opportunities. For instance, during a market downturn, when assets are undervalued, they might use a loan to purchase stocks or other investments at a discount. When the market rebounds, they can sell at a profit, paying off the loan and keeping the gains. If this insight into how the wealthy leverage debt is intriguing, don't forget to hit that subscribe button, like this video, and share it with others who could benefit from these strategies. Drop a comment below on what you think about using debt to build wealth. 4. The power of leverage. The key concept that underpins all of this is leverage. Leverage is using borrowed capital to increase the potential return of an investment. It's like a lever in physics, using a small amount of force to move a much larger object. In finance, a small amount of money can control a much larger investment, amplifying the potential returns. However, it's important to note that leverage also amplifies risk. If an investment doesn't perform as expected, it can lead to significant losses. That's why the wealthy are very strategic and calculated when using leverage. 5. Debt as a tool for wealth accumulation. Debt, when used wisely, can be a powerful tool for building wealth. It allows the wealthy to control and benefit from assets they wouldn't be able to afford outright. By using debt to buy assets that appreciate in value or generate income, they effectively multiply their potential for wealth creation. However, this approach requires discipline, financial acumen, and a solid understanding of the risks involved. For example, let's go back to Sam. By using debt to purchase income-generating properties and reinvesting the profits, Sam was able to build a portfolio of assets that grew exponentially over time. Each investment provided a return that was higher than the cost of the debt used to acquire it. This is the fundamental principle behind how the rich use debt to build wealth, ensuring that the return on investment exceeds the cost of borrowing. 6. Risk management and due diligence. Now, it's not all sunshine and rainbows. Using debt to build wealth comes with its risks. The wealthy understand this and always have a strategy for managing those risks. They conduct thorough due diligence before taking on debt, whether it's buying a property, investing in a business, or trading stocks. This means understanding the market, analyzing potential returns, and having contingency plans in place. They also don't over-leverage themselves. Keeping a balanced debt-to-equity ratio is crucial to avoid falling into the trap of too much debt and too little cash flow. 7. Tax advantages. Another reason the wealthy use debt is the tax advantages. Interest on certain types of debt, like mortgages or business loans, can often be deducted from taxable income. This effectively reduces the cost of borrowing and provides an additional incentive to use debt strategically. By leveraging these tax benefits, the rich can further optimize their financial strategies, keeping more of their earnings and reinvesting them into further wealth-building activities. 8. Mindset shift. Viewing debt as a tool, not a burden. The most significant difference in how the wealthy approach debt is their mindset. While many view debt as a burden, the wealthy see it as a tool, a means to an end. They use it strategically, understanding that when used correctly, debt can create opportunities for growth that wouldn't be possible otherwise. It's about shifting the perspective from debt being inherently bad to being something that, when used with a clear plan and purpose, can lead to substantial wealth accumulation. 9. Practical steps for implementing this strategy. So, how can this strategy be applied practically? The first step is education. Understanding the different types of debt, interest rates, and investment opportunities is crucial. It's also essential to start small and not overextend. Begin with investments that have a clear income potential, like rental properties or small businesses. Use financing options like mortgages or small business loans that offer favorable terms. The focus should always be on investments where the potential return is higher than the cost of the debt. Secondly, always have an exit strategy. Know how the debt will be paid off, and have a plan for what to do if the investment doesn't perform as expected. This could mean having a cash reserve or a backup plan to cover the debt if necessary. By being prepared and informed, the risks associated with using debt can be managed effectively. The wealthy understand that debt isn't something to be feared when used wisely and strategically. It's a tool that, when leveraged correctly, can open the door to opportunities for wealth creation that would otherwise be out of reach. It's not about reckless borrowing, but rather about calculated investments where the returns outweigh the costs. With that said, thanks for watching, and until next time, don't forget to subscribe, like, and share if this video provided value and insight into the world of leveraging debt for wealth creation.